Welcome to a video that I call the What to Watch video. This is a video that I prepare on an as-needed basis. The last video that I prepared was about 3 weeks ago. Sometimes you may see a lot of these videos being posted every week. Well, the things that we were watching 3 weeks ago haven't really changed all that much, so I haven't been posting any additional videos. So I wanted to make this video with an update, and yes, there are a few things that have been added to this particular video. The idea behind this is I just present in a shorter form video the things that I'm really honing in on. To get the real context of what's happening, it would be to your benefit to watch the daily videos that I post. That goes through a lot more charts. Yes, those videos are longer, and I realize people are busy, but if you want to get a real good context of what's happening in the market, the daily videos will cover what I'm covering here and an additional set of charts and analysis to go with that. This is being prepared for Monday, February 12th. The first thing that I go through is a list of those things that are positive right now. Then I'll go through and list a bunch of things that are negative. So we kind of get a balance between the two. I'm not a perma bear. I'm not a perma bull. I'm more of a realist when it comes to the market. The markets go up and the markets go down. They go up a lot more than they go down. But at the same time, we want to be realistic with what's happening in the market on all the different time frames. Looking at the first positive point here, we did set a new all-time high in Friday's session for the S&P 500. That was Friday, February 9th. We also confirmed that by setting a new all-time high with the NASDAQ 100, which has been setting a series of new all-time highs as well. The Dow did not set a new all-time high in Friday's session. That was set earlier in the week. It was under some pressure in Friday's session. The technicals are positive. By technicals, I mean all of the charts that we look at. They're all suggesting that we're going up and things are positive. But we're looking a little too positive. There are indicators that we look at that start to get overbought or extreme positive, suggesting that we might run out of steam. We might see some kind of a pullback, or we might actually reverse and start to go down from there. We don't really know what's going to happen at this point. We just want to be aware of when these things are happening. Now, when we get to an overbought condition, that can go on for a period of time. Unlike when we get to an oversold condition where everybody's freaking out and selling at the same time, we tend to hit a bottom all at once and then bounce up out of that. When we get to an overbought condition, we can kind of ride that because people aren't as nervous. They tend to buy low and sell high anyway. And as long as we're not pulling back all that much, they're willing to ride this out for a period of time. Also, we keep a close eye on growth versus value. When growth is outperforming, that tends to be more positive for the market. When value is outperforming, that tends to mean that the market is more defensive and possibly going sideways or even declining. For a lot of 2022, we saw value outperforming growth. But growth has been improving lately, and I have a number of different charts and a number of different indexes to show you that. Also, the S&P is in a solid uptrend, and I'll show you just a basic chart with the trend line to suggest that yes, we are in fact in a solid uptrend. Here's the first chart. This is an intraday chart based on 10 minutes. The red line is value, the blue line is growth. The blue line is above the red line, even though they're on different scales. The blue line is outperforming the red line right now, and that just means that growth is outperforming when we take both of these independently of each other. Then we look at a ratio between growth and value and also look at a 10-minute intraday chart. We bottomed out right about January 31st, and we've been showing some real improvement since then. What we're going to be watching with this is if we do start to pull back with the index and this keeps going up, that might mean that we're just going sideways or just seeing some kind of a short-term pullback. If this turns and really starts to go down and really looks like it's trending down, that could end up being more negative for the index itself. Then we look at an end-of-day chart. We also look at growth versus value. When we were going up, bouncing up out of the October lows, we saw growth really underperforming. And then what happened here is the S&P started chopping more or less sideways for quite a while. And then we started to see growth improving and start to outperform value. And that's when the index really started to go up. We're going to be watching the same thing. If we start to come down with the S&P and this ratio keeps going up, that will be more positive. If we keep going up and this starts to turn down, that could be more negative. Then here's just a bar chart of the S&P 500 with a trend line going up here. As long as we stay above this red line, we're still in an uptrend. If we start to pull back, we'll be watching to see if this trend line will offer some kind of support. Then we're looking at small cap growth to value, where we've been going sideways for about the last year or so. Now we're starting to break out, even though we're not really seeing that confirmed by the index. This could be positive for the small caps. Now, the small caps have been very frustrating. There's this thing called the January effect, and we saw small caps really going up in December. Then we got into January and we started to go down and even chop sideways. And a lot of people that were expecting this to happen ended up incurring losses. Is this going to improve now as we see the growth to value ratio start to outperform? We're also seeing some improvement with the mid caps. We've been in a more sustained uptrend when we look at the growth to value ratio here, but we haven't really been breaking out with the index itself. If this can keep going up and the index can break out, that would be more positive. If we start to go down and this ratio keeps going up, that would be more positive. If we go down with the index and this really turns and goes back down, that could be more negative for the index. Then I have a list of those negative things, and these are not necessarily doom and gloom signs. I like to be a realist when it comes to the market, but there are things all the time that we want to take as warning signs. It doesn't mean that the market's going to turn and go the other way. It just means that there are things that are giving us some warning signs right now, and we want to be aware of these things. If we really start to see a pickup with the indexes going down, that would probably mean that these negative signs are coming to fruition. Until then, we just want to be aware of them. The first one is that sentiment is getting extreme positive, and I have a chart to show you this. A lot of investors, especially newer investors, they tend to do things by hunches or emotions, and everybody's pretty positive right now, and they keep assuming that the market's just going to go up and up and up. Market doesn't like that. When folks start taking the market for granted, that's when the market tends to do the opposite of what people think it's going to do, and it defies human emotion and even human logic sometimes. Also, another thing that's been a concern, especially this past week, volume has been declining as the S&P has been going up. We've been setting multiple all-time highs with the S&P, and we closed above 5,000 in Friday's session, but volume's going down. That is a basic technical analysis rule that you don't want to see happening. Now, can volume pick back up? Sure. Maybe some of the folks that were going to invest in the S&P were off going to the Super Bowl this weekend, but for right now, this is a warning sign. We're going to keep an eye on volume. Also, interest rates have been rising lately. For the last year and a half to 2 years, as interest rates have been going up, that tends to put pressure on stocks. When interest rates go down, that's been giving some support to stocks. The fact that interest rates and stocks have been going up at the same time, that's different than what we've been seeing lately. Discretionary has also been underperforming. That's mainly to do with Tesla right now. Discretionary was a stronger area in 2023 and really helped the market go higher. Then it started to underperform last fall, and it's still continuing to underperform, but we are seeing some signs of improvements there. Then we do a 200 and a 50-period simple moving average study, and we're starting to see some negative divergences between this study and the price of the S&P 500. Also, the transports are negatively diverging from not only the Dow, but also the S&P. Small caps continue to underperform, but we could be seeing some signs of improvement there. A longer-term pivot is also in our future. The reason I bring that up is we hit a weekly pivot back on July 31st, 2023. That marked the high. We then spent the next couple of months going down, the rest of the summer and into the fall. We're just a little bit below one of those pivot points right now. We want to keep an eye on that on the weekly chart. And then the US dollar has been rebounding. For the last year to year and a half, as the dollar's been going up, that usually pressures stocks. When the dollar goes down, that's been giving support to stocks. To see them both going up is out of the norm of what we've been seeing lately. Here's the Fear and Greed Index put out by CNN Money. We're above the 75 level. Now, we could still go higher than where we're at right now, but when we get to 75 or above, we're currently at 77, this is when we want to take notice of this. Now, as this is going up, we can ride this wave higher, but when we get to 75 or above, that's when we want to entertain the idea of using this as a contrarian indicator. We're also seeing where interest rates have been going up lately, and the S&P has been going up as well, which is out of the norm of what we've been seeing recently. And then we're also keeping an eye on discretionary and staples, and we're mainly looking at the ratio down at the bottom. We were going up with the S&P and we were also going up with discretionary. That was pretty solid. But we kept going up with the S&P. We started to come down with the ratio between discretionary and staples, and we started to see a negative divergence. But recently, we've been seeing this ratio starting to go back up, but we're not quite back above this previous high yet. Also, this is the 250 period simple moving average study. As the S&P has been going up, we're seeing this study show a negative divergence. We're also seeing more of a pronounced divergence when we look at the 50 period moving average study. This is not confirming the strength that we're seeing in the index. We're actually seeing some weakness when we look internally inside of the S&P 500. Also, we're seeing this divergence. The Dow is close to making all-time highs, where the transports haven't even got back to this previous high yet. I'm not really including utilities as part of this analysis here. This is a longer term chart where the transports, this is where we're at right now. We finally broke back above this previous high set in late 2023, but we haven't come up to this high set earlier in 2023, nor have we come back to the all-time high set in 2021. If we could see some more strength out of the transports and eventually set a new all-time high as the Dow is setting all-time highs, that would be a confirmation. Until we see that happen, this is called a negative divergence and could put some pressure on the markets. Then we look at a ratio between the transports and the S&P 500. When this was really going up, that gave some good solid support to the S&P. Well, later in 2023, the S&P was going up, but this ratio was actually going down, even though it has been bouncing up a little lately. In a more solid environment, we want to see this going up the way it was earlier in 2023. The transports are a big part of the economy, and to have them performing better would really help the overall market. Then we look at a correlation where we have the S&P on top and the transports. This measures the relationship between the two, where it's starting to get stronger. So if the S&P is going up, chances are the transports are going up. And the inverse of that is also true. They could both be going down. As this goes up, that just means their one-to-one relationship is getting even stronger. Then we look at a ratio between the small caps and the S&P 500, where for most of 2023, the small caps were underperforming. Then we saw this nice little rise up at the end of 2023 as the January effect that only lasted in December was kicking into gear. Then we hit 2024 and we've been bouncing back down. But over the last couple of days, this has been going back up. But longer term, we're still underperforming. Then this is a weekly chart of the S&P 500 with pivot points. And the cool thing about pivot points is these are on the chart before we even get there based on price or what day it is. Just to give you an idea, this pivot point was already on the chart and we were going up back in 2021. And this is where we hit the high right at the end of 2021. And we all kind of are aware of how 2022 ended up playing out. Then we started to bounce back up and we hit the weekly pivot again on July 31st, 2023. That marked the high, and then we spent the next few months going down. Okay, we broke back above that pivot point, but we still have another pivot point above current price at about the 51.10 level. So if you want to write that down, we're less than 100 points away from that with the S&P. If we keep going up, we'll be waiting to see this not only now, but we want to watch this as things play out, maybe a week, 2 weeks, a month from now, to see if we hit this level and that ends up providing some overhead resistance again. Then we look at the US dollar index, where since the beginning of 2024, this has been rebounding, even though it's in a longer term downtrend. The fact that this is going up usually has been putting pressure on stocks, but lately they've been both going up together. So thank you. I hope you find this helpful. Please feel free to check out the full-length daily videos to get more of a context of what's really happening. I hope you have a really good day, and I will talk to you in the next video.